Hi, this is Zach Muir from Zach's Traders Cafe with a look at the major markets on Friday, the 19th of August. Starting off with the FTSE 100, we're bouncing off the floor of this rising wedge formation. Normally a bearish setup, but so far that's holding support at 68.50, which is the floor of the wedge. Risk of maybe intraday probes down towards the 20-day average at 67.89, but at least while we're above the 68.50 level, the chances are of a move to 7,000 and the July resistance line. But if you're cautious, you might be waiting for a clearance of 7,000 before calling this market any higher. Onto the DAX, and here the situation is that we've seen arguably a bit of a weaker picture than the FTSE of late, but support here nominally back at the floor of this rising June trend channel, 10,427, which is the 20-day moving average. While we're above that, the journey to 11,000 seems to still be on. Interesting that we're in the run-up to a possible cross between the 50 and 200-day moving averages, shown there in blue and black. For the Dow, quiet price action here, just up around 23 points yesterday, bouncing off the 20-day moving average level this week at 18,498. So while we're above that, still looking for 19,000 plus at the top of this rising wedge formation. Depends exactly where you draw the support line there, but that looks like the best fit that I've just adjusted it to. And we could see 19,000 over the next 2 to 4 weeks while the 20-day line is held. Onto the S&P, and this also using the 20-day moving average as support over recent sessions. That's at 21.75, so while there's no 100-day close back below that, target here as high as 22.20, which is the June resistance line projection. RSI is 61, so by no means overbought at all. Onto the Nasdaq, and floating rather higher even than the S&P and the Dow, given that it hasn't needed to touch the 20-day moving average, currently at 47.55. Support line there from June as well, backing that that support zone. And the view now really, while we're above the 20-day line, a target towards 49.50 or even 5,000 is possible over the next 4 to 6 weeks. For cable, a strengthening picture this week with better than expected numbers, but still we do have resistance from that July line running around the 132.50 level, so that looks like that'll cap the upside, at least for now. End of day close above that would of course change the picture and hint at 135 or 136. Stop loss for the bulls at the moment, 130.19, which is the 10-day moving average. Going on to the euro, which has been a strong market also this week, edging towards that main resistance from June, around the $1.14 rather, 116, the top target there at the top of a rising June trend channel, and that's valid while there's no end of day close back below the initial August resistance at 112.33. Dollar yen, the market, arguably the most active market of the major crosses at the moment, in focus, given that we're just near that 100 psychological 100 yen level. So far, resistance coming in towards 150. That's a line from July, 10-day moving average at 101.04. So at least while we're below that on an end-of-day close basis, still the risk of a target towards 95 or 96 yen over the next couple of weeks. Going on to gold and finishing the major markets with this market, still consolidating in the 1340 to 1350 zone. Need a weekly close or end-of-day close at least above 1350 to give us the momentum to target 1400 to 1450 at the top of that rising May trend channel over the next the following month or so. Stop loss on the bull argument at the moment is the 50-day moving average of 1328, just below that May rising trend channel. That's it from me. More updates at the same time on Monday.